the city of stratospheric land prices, Hong Kong real estate is a hot topic. What does it take to navigate through this uncertain landscape? In this episode of Managing Asia, I talk to the man running Asia's largest REIT, George Hongchoy. Link REIT, Asia's biggest real estate investment trust, with assets valued at over $27 billion. From shopping malls and offices to car parks and fresh produce markets. The CEO managing it, George Hongchoy.
Our vision is very simple: to be a world-class real estate investor and manager, but to serve and improve the lives of those around us.
Running the business was no walk in the park. The REIT was a fifth of its size when Hongchoy joined Link Asset Management 10 years ago.
That's in the middle of the global financial crisis, if you remember, January 2009. And the first day I was told, we need to refinance 3 billion Hong Kong dollars. I went to the bank and they say, we don't have any money. They didn't even have money for themselves. So it was a, memorable start, I can only say. And how it has really changed, over the last 10 years. The whole global financial markets have changed. QE obviously has helped. We have, as a result of this improved financial market, allowed us to refinance our balance sheet, our debt, and restructure ourselves to have a very strong capital structure for our growth.
In 2005, Link was the first REIT formed in Hong Kong after the government decided to privatize a group of community malls, car parks, and fresh produce markets held by the Housing Authority. But the business and rising rents over the years have attracted controversy. Under your leadership, you actually steered Link's shift away from managing just retail spaces and public housing estates to commercial properties like offices, and spearheaded its move into mainland China. Did you see the urgent need right from the start to really diversify away from a segment that was generating so much public unhappiness and discord?
We see opportunities. We see a lot of opportunities around us and how we can take care of those opportunities. But in the first few years, we focus on making sure that we actually do well with our properties. The properties that we have since IPO, how we can improve on them. So we've done a lot of asset enhancement projects. We have a lot of fresh markets, and we have changed those markets. It's something that is quite unique. If you like shopping in fresh market, you should really come and have a look. The shopping environment is so much better. We have also moved into other asset classes, into office, and starting to develop as well. The whole idea about changing all this is to add more growth drivers. We can then select which one to push harder on at different time in the property cycle. And we also realize that as we start doing that, we are just delivering a lot of good results from financial and non-financial aspects. And so, it has allowed us to deliver those impact and results that we can now see.
As you made that shift in your asset strategy, you had to face a question, of course, of whether you are still servicing Link's mission of helping the local retail community with affordable rents. How did you defend your strategy? How did you handle the concerns and public discourse that followed?
Well, the result has spoken for itself. If you look at how we have built relationship around the community, we have made sure that the occupancy have continued to be very strong. Our rent to sales ratio is still below market norm, so it still have had room for us to continue to grow. We want to make sure that the first thing we do is for our tenants to succeed. If they do well, then obviously as a landlord we do well. But we have to drive shoppers to come and shop at our shopping centers to allow our tenants to thrive. We obviously need to find good tenants. And as we manage to remake some of the tenants, improve the shopping environment, and then allowing them to really thrive.
From Hong Kong, Link REIT has expanded to Tier 1 cities in mainland China in recent years. You made your first foray into China in 2015. Since then, you've made 4 acquisitions, buying shopping malls in Beijing and Guangzhou, and a mixed development commercial property in Shanghai. What exactly is your asset acquisition strategy in China?
We believe in China and its growth in the long run. And we see a lot of growth opportunities there. And for real estate, the thing that you would have heard a lot of times is location, location, location. If we find the right asset situated in the right place, we believe that we can manage it a lot better and then create value. So in all the different assets that we have acquired, we are very careful in deciding which area with district, who are the people who go there, how can we improve, and drive continuous return.
The Chinese property market is cooling down, great buying opportunities, but at the same time you're facing a lot of foreign funds who are also looking to the market to add to their real estate portfolio. How will you fend off the competition to get the assets that you want?
Competition is good. It's part of our vision to say we want to be world-class. If we don't compete with some of these great competitors, we can't improve ourselves. So we keep innovating, we keep thinking about ways to do better so that we can underwrite some of these, maybe in some ways challenging opportunities. But if we manage to find the right spot that we feel there is a gap for us to go in, then we will try to grab those opportunities.
How many Chinese acquisitions would you like to do this year, 2019?
Acquisitions is a funny thing. It takes 2 parties, the buyer and the seller. So I have never been able to control exactly how much we manage to invest in a particular year. But we work very hard and we want to make sure that we don't miss any opportunity. So the team is running around those few cities all the time.
I understand you want to increase your mainland holdings from the current 12% to about 20% of your total portfolio. What are your returns like in China? Are they significantly better than your properties in Hong Kong?
The growth in China has been much better than those in Hong Kong. And what we can see is, especially in the retail segment, the growing middle class have produced a lot of opportunity for us to, as long as we provide a good shopping environment. We have people talking about e-commerce and all the challenges. At the end of the day, if we manage to provide the right retail offering, people will come.
What are your returns like in China? Do you have a number for me?
The return for investment have far exceeded our cost of funding. Some of the investment will have produced yield on cost for over 5%.
There are concerns among rating agencies that these China acquisitions that you're making will actually raise the risk profile of the REIT you're managing. What are you doing within the company to mitigate that risk?
Across a lot of these opportunities that we look at, obviously they come with risk. And some of it, for example, the currency risk, financing and all that. We are very careful in making sure that we have a strong balance sheet. We have our very high fixed rate component into our debt profile. And we manage the currency by making sure that we have some local borrowing as well.
As an investor in China, are you watching the headline news of this US-China trade war spat and what's happening on that front? Do you think that is having any impact on the market that you're investing in?
Macro environment will have impact generally in the economy, but for us to be looking at the individual asset is still very location-based. The asset characteristics have to be right for us. So we are very focused in making sure that where we invest in is a growth area. So we study in enormous detail in order to understand each of these assets. And then the macro environment is an overlay on top that we need to understand. But the impact is probably not as significant.
The Chinese economy is slowing down. Are you worried?
The Chinese economy is going to have volatility. And I think one of the strengths for us is to build a portfolio that is resilient and so that we can absorb any volatility over a period of time. And the diversification allows us to spread that risk.
Don't go away. More with George Hongchoy, CEO of Link Asset Management, in just a moment.
So I go in sometimes not as a CEO, but as a shopper. What do I like to see?
Managing Asia. We'll be right back. There are wet markets in Hong Kong. Then there are these markets, modern, clean, organized.
So I go in sometimes not as a CEO, but as a shopper. What do I like to see? And what are the things that will be great, this particular shopping center can offer?
Since becoming CEO of Link Asset Management, the people who run the REIT, George Hongchoy has transformed a number of assets, enhancing layouts, improving traffic.
Fruits, there's a lot of Japanese, Thai, Malaysian food. And this is a vegetable and fruit section, so and then the whole meat and all that is further on the other side.
So we're at the TKO market here in one of the suburbs here in Hong Kong. You've done some asset enhancement to this particular market. What exactly did it involve?
What we have done is really transform and revitalize a market which has been operating for a long time. Market used to have the old style high walls. You can't see through the market. We created a lot of these low store with beautiful display of fruits and vegetables. So when you come in, it's enticing and attract you to shop. In the old days, we used to have these boxes and cartons stacked up, and when they now have to compete with supermarket, with online and all that, this is an experience.
Okay, and you've also gone electronic as well.
Electronic payment is something that we are introducing even to markets.
Yeah.
People don't want to touch their banknotes and all that after you buy the fresh fish and meat. And so electronic payment is the in thing, and
So
it takes time. It's a habit change. The average shoppers, younger people are coming in, so the age coming down, and we think that is also part of sustainability. Second generations are operating some of these stores, taking over from their parents, and that's something that we haven't seen before.
Okay, so I assume that rentals have also gone up as a result of this.
Oh, their business have gone up a lot more than that, and so they are all very happy.
Asset enhancements usually requires investments. Investments ultimately translates into higher rentals. A lot of your retail tenants are small businesses. How do you handle the sensitive issue of raising rents in these poorer housing estates?
Well, the result shows that our occupancy continue to increase. The rent to sales ratio continue to be at a level that is comfortable for if each of the particular trade. So we want to make sure that they do well. And for the smaller tenants, we do help them in designing their product mix, in trying to make sure that they continue to evolve. And so the conversation that we have is very important to make sure that it's not just about rent. It's about the whole experience that they can bring as part of the whole offering that the shopping center can bring.
Do they always understand what you're trying to do?
A lot of our small retail shops in the shopping center is actually a core part of our offering. And for our neighborhood centers, this is key. So we actually are very focused on making sure that they continue to be adaptable to the requirement, not of us, but of the shoppers. I mean, the shoppers are voting with their wallets, whether they come to that particular shop to buy things. So rent is secondary. At the end of the day is how do you drive a shopper to come to your shop? And sometimes, today we like maybe Thai food, tomorrow we want Taiwanese. And whether you can change. Color scheme changes all the time. And one of the simplest requests to our tenants is adapt to consumer changing needs.
Do they understand your ultimate objective? How do you handle their short-term unhappiness?
A lot of our tenants have produced very successful results. And I think one of the best advocates for us are these tenants. And they are spreading it to other people. They are sharing it with other tenants. But the successful small tenants that are especially in our markets, they are so excited to see how the renovation have attracted younger shoppers. The renovation we have done, making the aisles wider, dry and clean, providing them with electronic payments and all that. You can see people in wheelchairs coming to our markets. Those are things that you have never seen in Hong Kong before. And so we believe that has attracted more business for the operators, and they've been very happy.
Link started out with something like 180 properties as a result of the government's privatization process. But over the last few years, you've been making divestments, selling off shopping malls, fresh markets, parking lots. The property market in Hong Kong is expected to cool down further this year. Are you planning to do more asset sales?
The disposal that we have done have attracted a lot of interest from Hong Kong investors and global investors. So we do review our portfolio on a regular basis. This is really just part of our capital recycling to allow us to improve the overall quality of our portfolio. And every time as we look at it, we're saying, can we offload some of the non-core assets and then add some attractive assets? Some of them are larger assets. Not necessarily in China alone. We have acquired opportunities in Hong Kong where we believe that we can add to our growth drivers.
Any plans to do more asset sales in Hong Kong this year? How much would you like to reduce your Hong Kong portfolio by?
Hong Kong is our core market. So we would love to be in Hong Kong and continue to expand in Hong Kong. So maybe if we can see opportunity to continue that recycling, we might consider whether we need further disposal. There's no immediate plan to do more right at this moment.
Where do you see the Hong Kong property market? It is cooling down. What's the outlook?
The commercial assets have continued to attract a lot of interest. Residential market, we see some concern, and affordability has always been a question. That might have some flow through to the commercial sector, but by and large, the commercial sector is still under supply, and so we see a lot of interest.
And this is one of Link REIT's biggest bets. An 880,000 square foot commercial tower it has co-developed from scratch in Hong Kong's Kowloon East.
It is right in the middle of what is now called CBD2 for Hong Kong. And so as more and more people move to this new area, it will become a thriving business center for Hong Kong.
How much revenue will it generate for the REIT?
It will be a significant return, and it's good return for us. Obviously, we're still leasing up.
Can your unit holders expect a bigger dividend payout as a result?
Our unit holders have been enjoying a growing dividend payout year after year, and that has been one of the attractions of drawing so many people to come and invest with Link REIT. The total unit return have far exceeded a lot of people's expectation. Just the CAGR over the last couple of years have been 12% growth every year. And so we believe that this will continue as we work as hard as we have over the last few years.
When it comes to asset development, what other projects are you eyeing? What else do you have in the pipeline?
There's a shift in population in Hong Kong. There's a lot of growth in the western part of Hong Kong, so we've done a lot of asset enhancement projects towards that side. There are a lot of assets where we have managed very well, but we haven't really touched up as much as we would like to. Some of them require repositioning. So each year we probably are working on about a dozen projects at the same time and completing about 7 or 8 every year.
Don't go away. Coming up next.
It's not a question about balance. We have to do both at the same time.
Do you think this pressure, this public scrutiny, all this criticism will ever go away? Managing Asia, we'll be right back. You're the CEO of Link Asset Management, responsible for managing the largest REIT listed here in Hong Kong. The organization itself has stirred up a lot of controversy just by the nature of its formation. How do you stay focused amidst all the politics that surrounds the business?
Well, Link is a rarity, very unusual in the sense that we are the only entity where we have a complete privatization of government assets. The government sold 100% on day one. And we have no controlling shareholders. We don't have a family behind us. And so it's a team of professional managers who manage the assets for the good of all the stakeholders, the unit holders and all the people that we serve. And what we need to do is really think of how we can build relationship, how we can develop conversation that they can understand our vision. And as a result, hopefully, can achieve all these common goals.
And how do you develop that conversation? Because the government is always constantly reminding you about your corporate social responsibility. How do you strike a balance as CEO between your unit holders and your stakeholders? Or do you simply tell yourself, I'm only solely responsible to my shareholders?
That's a question that we ask ourselves all the time at board meetings, at management meetings, Christine. So, it's not a question about balance. We have to do both at the same time. Our stakeholders need to see that we are doing good. Our unit holder obviously very focused on the returns. But returns sometimes is secondary if you don't do well for the properties and for the community. So we are very focused on doing all that at the same time. Challenges us to think about every incident, how we actually can look at it from different angles. Sometimes timing, you come up with a great idea, a great initiative. Is it better to launch it now or give a bit of notice period, longer notice period, and launch it later? Think about how to get buy-in. We have now created a momentum. We have created enough of a critical mass of positive impact so that those are the right story to tell.
Do you think this pressure, this public scrutiny, all this criticism will ever go away? What is the long-term solution you see?
Well, Hong Kong is a very diverse society, and there are a lot of different views. I love to hear all this diverse view, partly because sometimes we might miss something. As a management team of a very big portfolio. So it's okay to have these views coming to us, and then we can see how we can continue to innovate, continue to challenge ourselves to do better, and the needs and the requirement for us keep going higher and higher, because as we try to reach a world-class standard for what we want to do on a daily basis, we just have to push ourselves. So the noise is fine. It's part of what we want to just bring in as this diversity of view.
Even if it's bad noise.
Well, one of the things that we say is no news is something that we don't even know what's going on. So whatever that they are, we are very happy to take them on. And so this has really allowed the team to manage the business, to look at various perspectives at the same time. One of our board members used to tell us, we operate in a glass house. Everyone was looking at us. And we just need to make sure that we cover all perspectives. And this allows us to go further than a lot of our peers.
Do you ever miss anything?
Oh, we do. And then what we want to do is learn from that. The best thing about growing is you learn from your challenges and make sure that every time you are better than where you were yesterday.
You're 57 years old, graduated with a commerce degree from New Zealand. You have an MBA from Wharton University. You started out your career in management consulting, then moved on to investment banking before joining Link REIT in 2009. How would you describe your leadership and your management style?
Well, I believe I'm someone who leads with a passion. I'm pretty decisive and focused to make sure that we actually drive and deliver that vision that we articulate. And we continue to repeat that to make sure that people are very focused on that. And we hope that as we build that team, and I'm very lucky to have a great team with me to drive the results and deliver to people and communicate what we have tried to achieve and been successful in delivering.
Thank you, George.
Thank you.
And that was George Hongchoy, CEO of Link Asset Management, talking to me here in Hong Kong. Hope you've enjoyed the program. Do check us online at managingasia.cnbc.com for more exclusive leadership insights. Until next time, I'm Christine Todd. Thanks for watching.